Are you or your clients looking for a regular income solution with compelling returns to diversify your portfolio? If so, Neighborhood Holdings may be a great option for you. Listeners of this podcast will appreciate that public markets can be turbulent and finding a good private credit fund can be tough. But Neighborhood's track record, transparency, and investor alignment sets it apart from the pack. With nearly 10 years of consistent performance and a target net yield of 8 to 10%, Neighborhood has a track record of providing monthly income to investors without the volatility of public markets. How do they do this? Where banks invest in mortgages up to 95% loan to value, they also make borrowers jump through a lot of hoops. Many borrowers in transition aren't able to meet those hoops. Neighborhood has partnered with banks and brokers to provide quality borrowers with temporary financing secured by first mortgages at an average loan to value of less than 60%. Where other mortgage funds might take more risk by lending against construction, bare land, or jumbo loans, Neighborhood is focused on your average residential borrower who owns the average house in the neighborhood. Plus, their variable rate with a floor mortgage pricing benefits investors when interest rates go up and mitigates downside risk. Check out the link in the description or visit neighborhoodholdings.com to view the offering memorandum or speak to your financial advisor for more information. That's neighborhoodholdings.com/Loonie Hour. Before we get started, I just want to remind everyone that this information discussed today is not intended to be or construed as investment advice. Please consult a professional advisor before putting a loonie in any of these financial markets.
The dirty secret is that no one's ever going to get paid back.
People have the shortest memories when it comes to investment.
We just got to get Keith into Bitcoin. Hey, there's a bubble.
Welcome back to Loonie Hour, episode 187. As always, joined by the three amigos. We got the Boomer, this green shirt, and we got Richard Diaz over in Montreal with the art wall. Welcome back to the show.
Hello,
Richard.
Yes.
Good to see you again.
How's Miko Rantanen doing?
We'll get to that.
Tell me.
Boomer.
Why is Rich's room inverted?
I'm trying something new. I'm trying a new feng shui. Do you know what feng shui is? It's like this Japanese philosophy about.
I sell real estate in Vancouver. I know all about
it. So tell us what feng shui is then.
You can't have a house on the T, number one.
Okay.
Don't have your stairs as soon as you open up the front door.
Okay.
And you can't have a 4 in your address.
And you have to be facing the door. And your office,
foot of your bed cannot be facing the door either.
That's right.
Yeah.
Oh, hired.
I'll tell you what feng shui is, guys. You want to know what feng shui is? It means that you cannot have the Colorado Avalanche and the Montreal Canadiens continuing in the playoffs. Okay. They have to be going together.
That's
not the most exciting news. That's not the most exciting news. Steve, do you want to share the most exciting news of the week?
Yeah. We big thanks to the Neighborhood Holdings folks who obviously sponsored this podcast. They were gracious enough to invite all of us. Keith thought he was too big time to join, but Rich and I were invited to Warren Buffett's Berkshire Hathaway's AGM in Omaha, and Neighborhood Holdings team took care of everything. So huge shout out to Alex, who's a longtime listener of the pod and supporter, of course, and yeah, it was cool. Rich, we kind of knew it was like, might be his last time. How long is he going to be around for? He's 94 years old. And he actually announced at this meeting that he was stepping down to Greg Abel, the Canadian.
That's right. From Alberta. Elbows up. It was amazing. I have to say, I was so pleasantly surprised with the experience at the annual general meeting. First of all, thank you, Alex, and Adam for inviting us. It was really the trip of a lifetime, frankly. But yeah, just on the AGM itself was crazy. It was like 20,000 people packed into a stadium to listen to Yoda, because that's exactly what he is and sounds like. I parked at the end of one end of the stadium. He's just like at this like no nonsense, no frills little desk, and he just answered questions from the crowd. One of the questions was very stupid. We might touch on that later.
I think he had about 9 or 10 Cokes too during the whole thing.
And he just sits there and he's an old man. He's 94 years old, and he sat there and held court for 6 hours, almost 7 hours.
Yeah. 6 hours, I think.
It was incredible. And was also really cool is next to the stadium, which is in Omaha, Nebraska, which is the home of Berkshire Hathaway. Not everybody may know that. There was a convention center, and he was like, they're hawking all kinds of stuff. So they were selling Dairy Queen ice cream and like candies and like
Duracell batteries.
Yeah, Duracell battery. It was actually really funny. And at the beginning of the show, he was like basically trying to encourage everybody to go buy products from the companies that Berkshire Hathaway owns. But it was an incredible experience, honestly. Omaha, Nebraska, pleasantly surprised. It's a nice
Nothing
city.
going on there. Dead.
Nothing, but it was nice. It was cool.
Then
What did you learn? Any from a market economic perspective? Because one of the main questions that's directed his way all the time these days is his cash holding. Did he talk about that?
Yeah, so I think it was really interesting. So I mean, there was a lot of questions about why centered around or circling around like why they don't invest, when were they going to invest, what are they looking for to invest? And I think that I think there are 27% of their holdings are cash, which is an incredible amount. I think the highest ever. I mean, the joke was
350 billion, Rich.
Yeah. The joke was made that he was trying to make it easier for Craig Gable, his replacement, to affect his strategy. And Warren Buffett pushed that aside and said, "No way, I would never make it easy for my replacement." But I think it was really about how they just refused to invest in something unless they see a clear opportunity. And really, it was just about that. He's like, they're happy to sit on their hands, and it's a boring answer. But Warren Buffett, he's confident and clearly knows what he's doing. I don't think he was shaken or dissuaded by the multitude of people saying, "What are you going to do with all the cash? What are you going to do with all the cash?"
It's crazy. He owns 5% of the U.S. Treasury market.
Yeah,
5%.
It was really cool. The other thing that I thought, the other takeaway for me was just how he clearly loved Charlie Munger, which is like at every opportunity he had, he like kept on referencing Charlie Munger. And for people who may not know, Charlie Munger was his like partner in crime for 60 years. They worked together until just a couple of years ago when he died. And it was kind of nice and endearing, a little bit sad, obviously, but it was amazing, like how much reverence he had for his partner.
I have another story.
Tell me.
So after the conference, we went for a nice dinner. Rich and I left a little early, and I went and watched the Avalanche game. The Avalanche dominated Game 7, up 2-0, minute into the third period. Rich decides to jinx the game, says it's over, and Mikko Rantanen, the former Avalanche, hat trick in the third period. Game over. Probably one of the most heartbreaking losses I've ever endured in my life. And Rich, I have no one to blame but you.
Yeah, well, I have a lot of power. It seems, but yeah.
So now the Avs and the Habs are out.
Okay, well, back to finance, Steve. Thanks. It was really amazing. It was just it was a really incredible, diverse crowd. There was lots of questions from kids, which I thought was really cool. And I mean, I would recommend you go, but it's not going to be the same without him. Sorry, Greg.
Well, I'm looking forward to the Loonie Hour when we have our 60th year anniversary podcast.
We'll do it in the Bell Center.
Yeah, maybe not the Bell Center, but when I hear about Berkshire Hathaway and they're having in Nebraska, I actually think of Peyton Manning all the time. Omaha.
Yeah, that's right.
Yeah. Okay. Cool. Football
right,
guys, get that. Let's move on. Let's sort of jump into. We'll get more into market stuff now, but I wasn't able to attend because I had meetings scheduled in New York at the same time. So while you guys are off on a boondoggle, I was doing real work at the time. But why don't we talk a little bit about that, because that'll carry into the discussion today as well.
Are you trying to talk about New York?
Yeah, absolutely.
All right.
So
you take the reins,
any more Avalanche stories?
No more hockey.
No, I don't want to talk about it.
Yeah. Pepsi, Coca-Cola, Gillette, Dairy Queen.
Are you allowed to tell us who you were meeting in New York?
I'll tell you what I can tell. So myself and Brent Johnson and Mike Green, you guys might know.
Brent Johnson, the most hated man on the Loonie Hour.
Half the people like him, other half don't love him as much. Mike Green was there as well. If you know Mike, you know him. There was another gentleman with us. He's not a public name, but he's had a lot of success on Wall Street, and his network is pretty good. But the four of us met with the chief investment officer of one of the larger pension funds around the world. So it's not Canadian or US based. And so the whole reason we got together, because they have a lot of assets and a lot of liabilities as well as a pension fund, but they're trying to figure out which way is the world moving next. Has it shifted? What is this shift people are talking about? And I know, Rich, this is something you talked about a few weeks back, switching from this sort of globalist agenda to a domestic agenda, the end of the Bretton Woods regime and that. And so just to share with everyone, this is the exact same conversation these big pension funds are having as well. And they're trying to figure out, first of all, can they make money on it? Or more concerning for them is how do they protect themselves? So we had some really interesting conversations to share with them. We talked about how global risk is synchronized, but these big pension funds, they're literally worth, hundreds into billions, and an aggregate, you're in the trillion range. But they're looking at how the economy is trending lower in almost all countries around the world. They're concerned about debt loads and looking at currencies and all this stuff. So these simple conversations we're having on the Loonie Hour, we're also having equally simple conversations, except when Mike Green participates, because Mike is a bit brainy. But at that same level of assets. So it was really interesting, and it gave me a first idea, a first view on what some of these big funds are potentially doing. And that's very helpful for our side as well. But yeah, I had a lot of fun as well. I wasn't hanging out with the Oracle or anything, but it was right down on Wall Street having these deep conversations.
Keith, just a question. So Warren Buffett mentioned that he was concerned about trade being used as a weapon. Did the people you meet with, were they concerned about tariffs and that kind of thing, or was it sort of a broader discussion?
Yeah, it was two levels, Rich. So first of all, investment people, you just don't like uncertainty. If tariffs are going to be here and the world's going to grow slower, then they don't care, as long as that's where they're going and they know. So in general, the big money is not pleased with the volatility that's being created. Are there tariffs? Are they 140%, 240, or 10%? They don't like that. They don't really care, though, that they're coming, because they know they are. Everyone is in agreement that it is going to produce slower growth. Inflation is going to be very difficult. Mike spent a lot of time talking about how lower income families, they're the ones that pay the price for this. And this is something that we've talked about quite a bit. That's well known. But the other conversation that's sort of overlaid on top of all this is really the geopolitical one. Is the US dollar a weapon that the Americans can use? And some of the people in the room, they did have firsthand conversations with different levels of the intelligence community to suggest, yeah, the Americans know this, the Chinese know this, the Japanese, everyone in the world, they know this. A lot of these stories that are floating around out there when it comes to the dollar and the treasury market and stuff, sort of the headline news ones, they all agree they're completely wrong. It's a 180. So whatever big dramatic story here is likely the opposite of that. But no one had, the Americans don't have an incentive to collapse the Chinese economy. They certainly have an incentive to grind it tighter, and to turn the screws on them, but they don't want it to collapse, and, same vice versa and everything. So they will try to find a common ground with things, but people have to appreciate the strength of the dollar in the treasury market and how that's being used and played behind the scenes. So that was a big deal. So that's the overriding one, Rich. And then you have sort of the terror stuff is the microeconomic story.
That's really interesting. If I can just jump in, I know we're sort of getting sidetracked from today's schedule, but this is really, I think, really an interesting point, because Buffett repeatedly talked about the currency. And so there was lots of questions about debts and deficits in America and globally, but Warren Buffett's very much a US-centric thinker, I think, and certainly investor. And he kept on harping at the most important thing the US can do is protect its currency. And the quickest way to serfdom, is to sort of be really loose with budget balances and the ability to, spend and collect taxes, etc. It was really interesting because he kept on saying it over and over again. He said that, that's the biggest risk for him as an investor. And he made a sociological point too, which is like, if you look at history, where things go bad, where civilizations crumble, where empires fall, it's really when countries spend more money than they collect, and they do that consistently, and it's knock-on effects to the currency. That being said, I mean, they asked him about the viability of the US dollar, and he was unequivocal. It's that's the only place he thinks has any kind of strength to absorb any kind of negativity or liquidity or volatility.
Just to add to that, and this is interesting on your side too, Steve, is that we're coming to a point soon where the most valuable financial asset on the planet is going to be short-term treasuries. And people are saying, what the heck is he talking about? That makes no sense whatsoever. If you understand how overnight funding works in the repo market and collateral, letters of credit, the euro dollar system, everything is backed using collateral. And the only collateral that is accepted at that level, especially when you have a tightening economy, and we're trending tighter and so forth, is the treasury market. So we could absolutely see an economic and financial market experience where things are just horrible, but yet the dollar, and that, remember, if you want to buy treasuries, what do you exchange to buy them with?
Bitcoin? No.
The US dollar, right? You need US dollars.
US dollar.
Yeah, and it's very, so a lot of people, you see the headline stories on stuff which they don't make sense if you go 2 or 3 levels underneath. But I encourage everyone, start reading more about the repo market, the importance of treasuries, how commercial banks, settle their balances at the end of every day and everything. It's really interesting. So Steve, that's the the weekend of the dream weekend. You guys
That's
had
right.
a lot of fun, and I'm rolled up in a room, having some conversations.
Having some Pinot Noir with Brent Johnson.
There were some nice. I went to 2 steakhouses in 2 nights.
Tomahawk.
We went to a steakhouse. It was
with
really
different
cool,
people.
actually.
Different people. But
We went
anyway,
to a
let's move along. Let's move along.
All right, we got well, speaking of Berkshire Hathaway, Canadian Greg Abel taking over. I'm sure he'll be loading up on the Toronto pre-construction condo market. Those things are a bargain these days. We've got some data that's flooding out of Vancouver and Toronto. Again, pretty ugly. If you look at the Toronto housing data, it's funny because it's not often that you get the TREB, Toronto Real Estate Board, Keith, no matter how bad the data is, they always make it seem like everything's good.
It's a gully. It's a gully.
Yeah. So this is one of their first times it was a very downbeat report. Because the data was just so bad that you just really couldn't hide it. So year over year, Toronto detached prices, average prices down 6.8, semi-detached down 7.2, condos down 7%. So across the board, just large price declines in the GTA. Of course, we know there's very, very little liquidity in that market. And it's a similar story with the data coming out of Vancouver as well, which is just inventory levels continue to push higher. Basically what's happening is it's taking longer. There's literally very little liquidity in the market. And so what's happening is all the inventory is just piling up. So instead of let's say a condo selling in 2 weeks, well, now it takes 2 months. And so meanwhile, you still get the same number of new listings coming to market with really soft demand, given all the trade war uncertainty, people just sort of hanging out. And so, you got 7 months of inventory in the condo space in Vancouver, in parts of the suburban market, which we call the Fraser Valley. You have all time record high levels of condos for sale. And this doesn't include the record number of unsold units on developer balance sheets. And it doesn't include the record number of units that are currently under construction in the pipeline. So suffice to say, these are markets that I think are going to be well supplied over the next couple of years. And, I think the writing is on the wall that you're going to see more downwards pressure on those segments of the market.
I have a question. What do you need to see that market clear? Like if interest rates fell 200 basis points.
I don't even know if so. My view is I don't know if I don't think it's like, I mean, mortgage rates let's call today are 4%.
Yeah.
I think those are digestible. I mean, they're not 2, but it's a hell of a lot better than the 6. 4% is still, I think, relatively cheap money. And so I think the biggest challenge is like the trade war uncertainty. I mean, I give you an example. Like I was, working with a client more recently, and I get a message and they're like, oh, we got to pause our house search because we just saw Trump announced 100% tariff on films, and I'm in that industry. And you're like, well, I don't even know how a 100% tariff on a movie works, but it's just when you create that uncertainty, who's going to go out there and make, $1 million investment decisions, not only as a consumer buying a house, but obviously as a business, looking to build a factory or whatever it is. If every day you're waking up and there's a new tweet threatening a particular industry, it just freezes everything. So I think what's going to happen is ultimately, Rich, you and I are in agreement here. Trade deals will be struck, probably in relative short order. And I think that will unglue the demand side. Like, I'm not saying you're going to go back to massive demand, but I think demand will normalize to some extent, and that will help sort of alleviate the build in inventory. I mean, again, I still think you're going to have elevated levels of inventory, but how do you sort of stop the rise in inventory levels? I mean, you have to get demand up. And I think the only way you get demand up is through some certainty around the trade situation.
So interesting, because I was actually going to push back on that, but I guess you sort of you cut me off at the pass. Because I was going to say, if they had a complete detente next week, you think that the sales to inventory ratios would rise and
yeah, 100%.
Okay.
100%. Yeah.
So what you're saying is so first of all, the math, 4 is better than 6, 2 is better than 4. I like that analysis to start with, right?
Loonie Hour math. Yeah.
Yeah, it does work. But you get all this sorted out, then we're back to where we were in January.
I don't think so. Yeah, I mean, back to where we were in January.
But do you know what I mean? Overall, like as Rich said, like you're gonna. I mean, the Americans and the Brits, they announced some kind of a trade deal today, and all this stuff will get sorted out. And is the world going to accelerate then with growth? I don't know, but I still look at it as it's kind of similar back to just pre-COVID. Like in 2019, things were grinding tighter, and then January of 2020 was grinding tighter. And then we had, obviously COVID hit and this flush of liquidity. We haven't had a flush of liquidity into the marketplace. Like over the last 6 weeks.
Even with the equity market soaring and Bitcoin and everything, you wouldn't consider that a flush of liquidity?
I mean, with equity markets down, what are they down? 3-4% now, maybe? Like you have that. But my point is that, the animal spirits were stimulated again with money supply increasing, rates lower, tax cuts or delays and pauses and everything. Right now, we just had this sort of pause, that doesn't refresh. And then we got to get back to where we're going. So if you go back in time.
Oh, not again.
6. That's Loonie Hour event right there. What was so awesome 2 months ago? Because I remember back then we had economic concern at that point in time.
I don't think housing was moving that poorly in, say, January or December of 2020.
I mean, the whole economy, because you need everything working.
I mean, I think we've all been in agreement here that Canada's in a sort of silent recession for the last little while.
Yeah.
He's sticking his elbows up in the air.
I guess I'm just surprised that just to go back a little bit, I'm surprised that you think that the trade dispute affects people's house purchases.
What do you mean?
I know, like in my head, I can't.
You just gave me a story about the film producer. Come on, man.
That's like a tiny industry in one city.
Yeah, no, but like all the boomers watch CBC and the Global News, and when they keep hearing threats of Donald Trump trying to invade the country, which is how they're framing it, like people are like, "Holy shit, this is."
Okay.
I got to stick my elbows up and sit on the sidelines. And that's what they've done, right? I mean,
Yeah,
I think
no.
it's like it's policy on like I can like say, yeah, I don't know. The real estate market hates uncertainty. Anytime there's like a policy change or policy shock, whether it's a foreign buyer tax, foreign buyer ban, speculation tax, whatever it is, that initial shock will basically freeze the market.
Yeah, I guess that's true of every industry. And the small business survey is still quite negative. Yeah, okay. Maybe I'm being too sanguine on it. All right.
Well, it's bad when you start like, again, just from like a sentiment perspective, Keith, like how often do you read articles that are penned by TD's economics team, chief economist, suggesting that condo prices in the GTA are going to fall 10% this year?
First of all, I'm shocked that TD has an economics team. Come on, I'm joking. Everyone knows that. It's not meant to be anything, but it is. I don't know. Yeah, I think just, I mean, you're right, Steve, and Rich, sort of. The whole tariff discussion has all of a sudden people had to talk about risk again, right? That's what happened, and we're going to move on from it. And I can't quantify if things will look better going forward than they did a month ago, because back then we didn't quite know how things were going to look. But my point, though, if things might look better going forward, they're not going to be as positive as they were 2 months ago, before they were even brought up as a discussion.
Mm-hmm. Yeah,
that's what I think. That's what I know. It's what I feel.
No, I don't disagree with you. I mean, I think that
feel it in my fingers, Rich. I feel it in my bones.
Ever been abroad and needed Wi-Fi? Download Saley. Tired of telecom oligopolies ripping you off? Download Saley. Want to avoid sketchy SIM sellers at the airport? Download Saley. Saley might be the only travel app you need. It provides an internet connection wherever you travel and saves you money on roaming fees. It's easy to use, affordable, and reliable all over the world. Saley is the modern, seamless way to get connected without the need for physical SIM cards. With eSIM technology, you can instantly activate service from anywhere in the world. No more waiting in line for a local SIM or dealing with expensive roaming charges. Saley offers flexible plans to fit your needs, whether you're traveling for work or leisure. Plus, you can switch between networks in just a few taps, ensuring you always get the best coverage at the best rates. Whether you're a frequent traveler, an expat, or just someone who wants more flexibility with their phone, Saley's got you covered. No hidden fees, no contracts, just affordable, reliable data wherever you go. Visit saley.com/Loonie Hour for 15% off.
Speaking of trade wars and hopefully getting some clarity on that, our dear leader Mark Carney was over at the White House a couple days ago. You watched the press conference there. It was about what, 30 minutes long?
Yeah, it was 30 minutes long. Yeah. I mean, it pains me to say this, but I think he did a really good job. I think he did a really good job.
You and I were texting in the group chat and we're like, yeah, like I think, he didn't get our vote, but I think that, we remain.
So what did he do? What did he say?
He kept his mouth shut. Honestly, he just kept his mouth shut. He didn't take any of the stupid bait around the annexation or the invasion or whatever, all bullshit that CBC is filling everybody's heads with. He obviously made a firm stance. He said, Canada's not for sale. Duh. He said that, but I think that on the genuinely on the positive things, he just let Trump ramble on and take the stage, which is what the guy likes to do. And he focused on what I think is the really important things, which is, by the way, he mentioned fentanyl twice in his first opening statement, which is really interesting for all the people out there who think it's not an issue. I thought that was quite an interesting tell. He mentioned security being very important. I think he was rather gushing, to be honest with you. He stroked Donald Trump's ego, saying he was a transformational president and blah, blah, blah. But he also said that there's plenty of scope to work together. There were strong partners, all the gobbledygook that you would expect from two countries that have economies that are fully integrated with the longest unguarded border in the world. And I have to say, it was not elbows up. I can guarantee you that. But I genuinely give him a B+. Rich,
but that was what we were talking about, right? Like you and I have been chatting about this for weeks and months now, which is it was hilarious because the whole narrative around the election, Carney, give him credit, he played brilliant politics, right? Elbows up, we're going to act super tough. We're going to get these guys. We can trade with the rest of the world. We don't need America. And then
our relationship with America is, quote, over. Do you remember when he said that?
Yeah. And obviously, as soon as he's in, it's okay. We got to cozy up next to these guys because there really is no other option.
You have to give the Liberal Party credit. Let's just give it where it's due. They played Canada.
Okay, a couple things. I'm going to get you guys out of Carney's hands. Yeah, that's what I was about to say. Man, you guys are easy. You guys are very.
Come on, go for it.
Okay, so first of all,
my red shirt on the next pod.
Okay, I'm more realist here. Let's talk about gaslighting. This is the definition.
Yeah, we're agreeing with you.
Okay, so let's think about during the election. Gaslighting is the denial of reality. So you're repeatedly denying verifiable facts with different statements and policies. You're blame shifting. So you're accusing others, often the media, the opposition, or marginalized groups, for causing their problems domestically that the politicians created themselves. That's what happened. Your contradictory or whatever. You're saying one thing publicly and then doing or claiming the opposite without acknowledging. That's what just happened. You're undermine any critics. You're calling them as being lazy or liars or conspiracy theorists. And most importantly, it's emotional manipulation. And this is what happened. You are exploiting fear, nationalism, identity politics to make people feel disoriented or dependent on the leader's version of the truth. And here we go. Within 3 days, Rich, you're now gushing over what this guy.
No, I'm not. I'm saying that the level of cynicism that they have demonstrated is, in my view, to be applauded. It's a criticism, but on some screwed up level, you have to give them credit for gaslighting all of Canada. And then
so let's move away from that part, because I mean, the view I'm taking here right now. We have to see something concrete to come out. I get it. And I can assure you 100%, everyone who's looking at the resource sector, the energy sector, they're still looking at the bill to C-69. So if Carney comes out and now he says, he's going to make amendments to it, like, holy smokes, 3 weeks ago, he said, I am not changing this. No way on earth am I changing this. I wrote a book about it. I'm not changing this. And so my point is that let's wait for this sort of, face it, the guy's able to sit still for 20 minutes. I mean, let's see what comes out next. And then, like we said, Canada has a great opportunity here. But until they open that door for the resource sector, the door's not open. Like we're still not there.
I agree. I'm not like, listen, I'm not going to roll over and say, hand them the Nobel Peace Prize. What I'm saying to you is, Steve asked me a question, how was the first press conference? And it went well, but I agree with you 100%. There needs to be some concrete action. He needs to very much disavow everything that he has fought for the last 10 years. And then I'll say, okay, good job.
Okay, so I'm going to carry the big burden on the Loonie Hour for a while. Okay. Rich is going to dance around, and Steve is going to bring us both back in.
I want to add to that. So speaking of gaslighting, while we're on the topic, did you guys see that? So Andrew Scheer, who's now the interim party leader, I guess, Rich, or I don't know what the wording is.
Yeah, that's whatever.
He's the interim leader while Pierre Poilievre goes for his by-election to get his seat in Parliament. Andrew Scheer has been nominated as the kind of the guy to step up. And so he did an interview. I don't know. I think it was with CBC. And basically the CBC host, I don't know when that guy's name is, David something or whatever.
No, something. David Cochrane, I think.
David Cochrane and Andrew Scheer, they got in an argument where David Cochrane was trying to suggest that the Bank of Canada basically didn't print money during the last, 5 years during the pandemic. That he's, technically, they're based on settlement balances. And anyways, this kind of blew up on Twitter. There was a big debate, and you had people like Andrew Coyne who chimed in, Rich, and I'm going to read this from Andrew Coyne. He says, what Scheer and Poilievre are spouting is not, as they imagine, monetarism. It's comic book monetarism, a character of monetarism. Monetarism for undergraduates. The quantitative theory of money does not hold that inflation is a straight line function of the money supply,
but rather of the intersection of the supply and demand for money. PQ equals MV only collapses to P dash M if Q real output and V money velocity, the inverse of the demand for money, are held constant. Constant V may be a good working assumption, at least in I'm not going to go on, but anyways, gaslighting the public that we didn't have essentially rich money printing.
Yeah.
For the layman's term, it's not. It's technically, yes, it's technically, in a technical definition, was not money printing.
Yeah. I mean, listen, I mean, Keith, I think Keith definitely wants to jump in here. So Keith, you go ahead. But nobody, absolutely nobody in the world thinks that there was literally somebody with one of those cool green visors and those glasses sitting in a basement at the New York Federal Reserve printing cash out there. But anyway, it's about quantitative easing. It's about increasing demand for government bonds, suppressing the interest, the yield curve. It's about creating an incredible amount of money supply, which inflates asset prices. This whole bullshit about the formulas. I don't even know.
But Rich, this is
did anybody like, was this, I mean, it was a big deal for us because, you know, we're on the, you know, the X platform reading it, and you know, it's, so this is where the criticism comes on the CBC from me. This is my perspective.
Yeah.
If you have a guest on, and like, I've never met Andrew Scheer before, but he doesn't come across to me as a financial, as a person with significant experience in this world, in the central bank monetary world. But if he would suggest something, and I'm the journalist or the, you know, person hosting, I would say, okay, let's dive into that deeper. That's interesting. A lot of people are talking about it. Instead of immediately firing back and say, hey, you're wrong to even suggest that, and then you get your own team members to start piling on afterwards. That's what's wrong with the media these days. As a journalist, you should be curious and interested in what someone is talking about, and then dive further into it. But you know, this whole conversation about whether the government at the time created inflation, they 100% absolutely did. There is no question about it. If any of these guys, Andrew Coyne, is that you
Coyne,
said?
yeah.
Okay, Andrew, if you want to call me and come on live, please feel free to do it. The CBC lad, what was his name, Rich?
David
Cochran.
Okay, David, if you want to have me on your show, I will have a conversation with you about it. And I guarantee you, when we're done the conversation, you're going to say, okay, you made some really good points here. The Canadian government did definitely participated with other governments around the world to not just create a little bit of inflation. They totally screwed the world up so much, it will never recover. It's going to be 100 years. But it's true, though. It's going to be 100 years before these imbalances are even remotely coming into play. And 100 years from now, they're going to go back and say, well, Andrew Coyne said M equals PQ to the nth degree. I mean, that's the typical part of gaslighting when you start throwing around economic theoretical formulas and so forth.
Well,
but I put out a tweet, a thread about what really happened. If you're really interested in it, just go find it. And you know, that's what really went down. Like these guys, it just makes you.
There's another angle to this. There's a really, really important angle, which is I find the craziest part, which is Ben Bernanke wrote a speech or wrote a paper in 2012 justifying and explaining quantitative easing, how it works. And although they, in that paper, they literally talk about how the point of quantitative easing and quote unquote money printing is to raise asset prices. Right? So even if you don't necessarily get outsized jumps in the change in CPI, e.g. inflation, which did happen, but even if you don't get that, quantitative easing is designed by the Pope of quantitative easing, Ben Bernanke, who did his PhD thesis on the Great Depression and quantitative easing, the point is to raise asset prices. It is a transfer of wealth from savers from the working class, from savers to borrowers. People who hold assets have their assets massively inflated, which true doesn't necessarily flow into CPI. but it is massive asset inflation. That is the point of it. And so this CBC, and guess who owns assets? Rich people own assets. Equity holders own assets. Guess who doesn't? Working class people don't own assets. And so it is a transfer of wealth from the working to the labor class, from the labor class to the capital owners. And this idea that we didn't quote unquote print money is demonstrably true and is gaslighting, and frankly is disinformation. And the CBC should either apologize or should know better, or ask somebody, rather than make scoring political points to defend the Liberal Party or whatever. It's just crazy.
Rich, you had, well, they used to call him Helicopter Ben.
Yeah,
He was the head of the
that's right.
head of the
I
Fed
forgot about
during the
that.
U.S. subprime crisis. So he was kind of the granddaddy of QE. Obviously, that's definitely been partially responsible for the Canadian housing bubble. Having a decade of QE and zero interest rate policy. And Rich, you put out some good charts. I remember back in the pandemic, right? Which at one point, I think the Bank of Canada was absorbing about 90% of all debt issuance.
It's my pinned tweet. Sorry to interrupt you, but it's my pinned tweet. If you go on my Twitter account, you see literally, I'm trying to desperately find it fast, but like, it's literally,
it's the very first one, Rich. It's straight up by your name.
Bob.
Exactly. So from 2020 to the end of 2021, the government of Canada, the federal government, we're not even talking about the provincial government, the federal government borrowed 401.5 billion Canadian dollars, and the Bank of Canada increased its assets by printing money by 350. So they absorbed whatever it was, like 87% of all of the debt issuance. Anyways,
P equals MVQ. Move on. What else going on, Boomer? We got the Fed.
Yes, I mean, I don't know if you guys are aware, but there's a bit of a tug war going on between the president and the head of the Fed. One guy wants the Fed to lower rates because that's going to stimulate the economy, and the Fed guy, he also wants to cut rates as well. However, he can't because he's been suggested that he cut rates. So you have that little game going on. But the Fed had their meeting, and it was no surprises with it. They did not cut rates, by the way. And you had a bit of a dovish, hawkish bit of conversation, but there were no surprises. The one thing that did come up, they reduced the amount of QT, quantitative tightening, which is sort of reining back in all the QE. I think they reduced that on the mortgage-backed security portfolio. Was that right, Steve or Rich? I think from 25 down to 5. It's a pretty big drop. But I suspect at some point coming up soon, you're going to see all central banks cut rates. I think that's where we're going. And you will see, I hope CBC is listening, and Andrew Coyne, QE is going to be back on the table, boys. It's coming. So this was
so, eh? How soon?
Yeah, I think that's where we're going.
Give us the day.
I don't know how soon, but you look at the trend. So they will cut. Everyone will cut rates because the economy is going to grind lower and lower, tighter and tighter. And so it's one thing to cut rates, but then they'll also do QE again to provide even more stimulus, to the global system. That's where we're headed.
Keith, is that to keep the long end, the yield curve down?
It could be, but it's also really just so. Okay, so the real quick nerdy explanation of what QE is, it's not money printing to be technical, but so the government of Canada, they need to borrow. Say it's 500 billion, right? One lump sum, and there's no one out there that's going to buy it. That's what happened during COVID. So they have to go through the primary dealer, call it any of the 5 big Canadian banks, or if you're in the US, you're going through like JP Morgan, Goldman, and those guys. They immediately buy it as a conduit, and then they sell it to the Bank of Canada right away. So the commercial banks, they clip a little fee for doing it. But then what happens, the Bank of Canada, they will credit the reserve account for the banks with the Bank of Canada. And that just gives, in theory, the commercial banks more capital available that they can leverage then to lend to the economy. So we're being a bit disingenuous when we say, yeah, they were money printing, cranking it. You just can't crank it out. You can't do the Ben Bernanke helicopter meme. It is flowing out, but it does get into the economy in different ways. It can target different parts of the yield curve, Rich, but it's a very difficult way to stimulate the economy. If you're in China, do you know what the Chinese would have done?
What?
Just giving everybody money, right? That's what you do. You don't need to
give them
go
any
through this.
ideas, Keith. Don't give them any ideas.
Well, it's kind of, but if you're going in one way, if you want to stimulate, give people money, instead of giving them like a 4D chess reason, okay, let's borrow some money and do something with it, buy a house in the Fraser Valley or something, just give them the money. But that's what happened during COVID. They did all of that. People had checks showing up in their bank accounts. Rates were at zero. The Bank of Canada governor told you they'll never raise rates again. People got paid to not work or work less. You had all that stuff going on. We may not be going back to that same degree of a challenge coming up. But again, it's our expectation now. All the central banks are going to start to cut rates. I think the Brits cut today, didn't they, Steve? Didn't you mention earlier to us?
Yeah, they did. Yeah.
Yeah, the Brits cut by 25 basis points. No, that's not the right way to say it. You know what I mean? But I think that's where the Fed is going to go, and the Bank of Canada and QE, it will be coming back. I don't know if that helps.
So just so everybody's keep tracking at home, I basically track 8 major central banks: UK, US, China, Canada, South Korea, Euro area, Japan, and Switzerland. And of all of those, the only country / region that has not cut is Japan. And they're starting to make, we didn't talk about this last week, but they're already starting to wobble on their inflation mandate, basically setting the stage for
Did they say we're not quite ready to change our inflation after 40 years of going through this? We're still not quite ready yet.
Hold on, how many rate hikes did the BOJ get? They got like 20 basis points worth of hikes.
No, we went over this. So they started at negative 0.1, and they've done 1, 2, 3, and now they're at 0.5.
Time to make the U-turn.
And now at 0. At the heady levels of 0.5%, they're already starting to throw the trial balloon out there to see if they can reverse course.
So in the hockey world, like they're the skater that's little short strides, right? Chop, 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 chop with their skates, and everyone else is like gliding, with nice strides.
But Keith, it's not just. Sorry, one more thing. It's not just the developed world. It's all the Asian central banks have done so too. Philippines, India, Indonesia, Hong Kong, Malaysia, Taiwan. I mean, it just goes on and on. I mean, I'm not sure. And this Latin American countries are doing the same. Admittedly, there's less of an inflation impulse, but it is interesting, as you said.
So one more, I know I have to go in a little bit, but is a really important data point that came out. So the Bank of Canada's financial stability report came out.
Mm-hmm.
There was one statement from that, which should be the headline news story everywhere. CBC, are you listening? Do you think they'll have it? I mean, that's a test to see if they have it. But specifically, and Rich, this is from your favorite central banker, of course.
Ooh. Carolyn Rogers.
Yes, it is. Ms. Rogers says, hedge funds need to make sure that they are prepared to respond to sudden liquidity needs without disrupting market functioning. That's for the Canadian bond market.
Yikes.
I'll repeat it again. Hedge funds, this is the central banker wagging her finger at the hedge fund world. You need to make sure that you are prepared to respond to sudden liquidity needs without disrupting market functioning. So what they're saying, if you're a hedge fund and you're holding Canadian debt and something else happens with another part of your book, we really discourage you from selling the Canadian federal bonds you're holding. We don't want you to create a crisis in our part of our neck of the woods instead. But that's what happens. If you need liquidity, you can only sell liquid assets. Again, Bank of Canada, this is a pretty big statement that came out today.
There was more in that financial stability report, which is just a continuation of the trends we've been talking about. And again, it's free. You can just Google it if you guys want to. Chart 1, signs of financial stress remain concentrated among households without a mortgage. It's interesting. All of the sort of all of the delinquency rates, although low, are just grinding higher, which I think is just a continuation of the trend we've been talking about.
Just looking at, just put into context, Rich, the delinquency rate for residential mortgages in Canada. They're at, as of Q1 2025, they're at 0.43% of the total loans outstanding, which is insanely low. I think they reached.
Go ahead. Sorry.
I mean, even during the financial crisis, they reached 0.47, 0.58. So we're slowly
does that
getting
make any
there.
sense? That just doesn't make any sense. The U.S. ones get into their starting point are much higher. Is that just because we have a completely different mortgage market, or?
Yeah, I mean, it's a question probably for Ron Butler, but
Okay.
you know, I mean, Bank of Canada also put out a chart on the last page, basically showing that assuming there's a severe and long-lasting global trade war, it could, they run their models, it could push the rate of mortgage arrears beyond levels reached in 0809, which would take your arrears rate to about 0.57. So I don't know, just to put that into context, obviously.
Yeah, I'm not saying that I think the Canadian banks are, I mean, Keith is going to make fun of me. I think they're very well capitalized and they have a good, they know how to, they know. But I'm not trying to create panic. I just think there are some really interesting sort of, I'm just surprised that these delinquency ratios are so low compared to.
So actually where you will run into issues is more likely in your private lending space, credit unions, things of that nature.
Okay. Cool.
I mean, one of the other notes from the Bank of Canada stability report, and see, this is something you've been talking about for a while. They say 60% of households with mortgages will renew this year and next.
Yep.
That most will see their payments rise because they took out loans when borrowing costs were at rock bottom lows. And these is my in bracket comments. This is when you told them to take out the loans at the rock bottom. But again, so the Bank of Canada, they're responsible for sharing with the country where they see risk, and because something's a risk, it doesn't mean it has to happen. By the way, so I mean the whole global macros, we're always talking about risk, and none of them rarely happen. You think of it that way, but the Bank of Canada, they are concerned about the mortgage world or the lending world is also then most importantly, because again, I go back to this liquidity statement, towards hedge funds. When you have a crisis, and it is in the debt world, people need collateral very, very quickly, and you got to find it.
Just to add to the comment there on mortgage payment increases. So the Bank of Canada, again, these are just their best estimates given where rates are today. These obviously can change. So they put out a chart showing the 2024 report that they put out compared to the one they just released to show sort of their changes in their assumptions. And obviously fixed rate mortgages have dropped quite a bit over the last, call it 12 months. So they show that their original expectation in 2025 was for the average mortgage payment to increase by 14% on renewal. Now it's down to 8%. So they're saying the average payment increase for mortgages renewing in 2025 will be an 8% increase in your monthly mortgage
reconcile payment. Though with the smell test in your world, I find that hard.
Yeah, so I mean that's a good. So I think the challenge here is yes, there's the extreme examples where people that locked in, let's say, I guess in call it 2020 at 2% on a 5-year fixed, will be renewing today at 4%. So that would be, but I think there's a huge cohort of people also that took out, let's say in 2022, when rates were rising and people didn't want to lock in for 5 years, a lot of the most common mortgage term in 2022 was 3-year fixed. So those 3-year fixed were running at 4.5%. they're actually coming up for renewal, and they're actually going to renew at a lower rate than they had in 2022. So there's kind of a cohort where I think there's going to be a chunk. There's going to be obviously a portion of people that, especially ones that were on, let's say, fixed payment variables, where they haven't been paying any principal down. Those are the people that are going to be in tough. So yeah, it's. I think that's Rich, you would know that's the issue when you start using averages, right?
Yeah, you read my mind.
And from a central bank perspective, they don't care about you as a household. They care about the aggregate level. So that's a fair comment. It just seemed to me to be a bit small. So if someone
we've talked about
has a $4,000 a month mortgage, which I think it's quite normal in some of these bigger cities. Are we saying their payment is like $160 more a month if it's 4%? Is that Louis Hour math? Does that work, Rich?
Someone's got to pull up the calculator here.
Oh boy.
Yeah, I think that we've talked about on the show, right? There's people that have been on these fixed payment variables where they haven't done anything to the principal. They've just left it. They've actually deferred interest, and amortizations have gone from 30-year amortizations to 100-year plus amortizations in some extreme examples. Right? That's not the norm. Right, most people
they'll be around when all of this mess has been sorted out with the QE and everything. But remember we said earlier it'll take 100 years. Yeah, okay.
There's another angle to this, which is people have had wage growth, especially if you work for the government. No, but all jokes aside, we often talk about debt service ratio, which is how much as you pay relative to your disposable or gross or net income or whatever. Net incomes have risen in nominal terms, maybe not in real terms, but they've risen in nominal terms.
Yeah.
Anything else that we need to talk about?
Keith's pointing to his watch.
I have very important things to do.
Yeah,
no, I got another call coming up. That's all. Yeah,
that's okay.
A bit late. This was fun. We have when is the next BOC? It's not next week, but we are soonish, I believe, in that world.
We got to do another Twinkie bet, because I think it's starting to get interesting. Where are they going to cut? Are they not going to cut? So we had the UK.
So
cut.
June 4th. So we're about a month away.
Oh, it's far.
It's a little early to make the bet.
UK cut. China.
I'm already down.
I don't think we talked about it, but China cut as well. That's going to be an interesting story, I think, developing. Save that for another pod. Rich, any final parting words?
No, I think that's it for me today.
I think one of the comments about the ending of the podcast sometimes that it just sort of runs out of energy.
Yeah,
and steam.
Sad.
It is.
All right, that's a good place to wrap it up, guys. As always, appreciate the support. If you found this podcast entertaining, valuable, anything whatsoever, please share it with one friend, family member. Leave us a review. I think we got 1,500 now on Spotify, but it does help push you up in the algos. Actually, I think Spotify just changed their algorithm, so now it's going to start showing plays. The more plays that you get, the more you'll get pushed up into the algos, and that will obviously help continue to push the Loonie Hour community up into the feed, get bigger and better guests. And as always, guys, thanks so much, and we'll see you next week.